Hi everyone, welcome to today's video. So on today's video, I'm going to show you and discuss one specific small cap stock, and it has not gained a lot of traction yet. So what that means is that this stock can exhibit something called as multiplier effect. So multiplier effect simply means that, for example, if you go and buy Asian Paints today, it is trading at 300,000 crore. 300,000 crore. It's a huge market cap. If you buy it now and even if the results for Asian Paints is good, will it double by the next 2 or 3 years? The answer is no, right? Most likely the answer is no. It is not going to double because of the size of the company that is there. Already major investors have invested their money. So these are mature companies and they will not 3x or 4x. Hence that multiplier effect will not be there on this company. But if you identify a certain company, especially in the small cap segment, which is doing well, and if you invest your money early, then that company is likely to grow from 1300-1400 crores to even 30-40,000 crore. So that is how money is multiplied. And this is what major investors like Mr. Rakesh Jhunjhunwala and Mr. Radhakrishnan Dhamani do. If you recall the investment of Titan by Mr. Rakesh Jhunjhunwala, he bought that stock when Titan was a very, very small company. He put insane amount of money in that company, that money grew and his portfolio and net worth grew with that company. So all the investors should be on a lookout with these kind of hidden gems, and I'm going to discuss one such hidden gem with you. Now this is not an investment recommendation, especially small volatile stocks are not investment recommendations. Why is that? Because I'll explain you the reason also. Now this is like startup investing. For example, when I invest my money in any startup or whenever I'm running a startup, there are so many changes that will happen within a year, within a new startup. It is like a newborn baby. So of course, it will go through a lot of changes. So we don't know how the business will shape up even 6 months from now. So that visibility is very tough to ensure, and therefore this stock is not an investment recommendation. Please do your due diligence. I am an investor in this stock. That is all I am telling. Please see my analysis. If you like it, you can put in your money. If you don't like it, please do not put in your money. This is not a safe stock. That is what I'm honestly and very, very transparently communicating to you. Okay. So which stock am I talking about? So I'm talking about a company called as NGL Fine Chemicals Limited. Now, it's a very small cap company. It is only 1600 crores, but there are a bunch of good things about this company that I wanted to quickly explain on this video. Now, let us first and foremost very quickly understand. So what is it that NGL Fine Chemicals actually does? So if you take a look at the product wise revenue breakup, you will understand it specializes in something called as wet based APIs, right? So these are basically APIs or active pharmaceutical ingredients which are used for treating animals. For example, as humans, we take medicines, right? So how do these medicines get manufactured? So they get manufactured by something called as API. So API is active pharmaceutical ingredient. I made a separate video on Aarti drugs. You can watch it to understand more about the API space. So for human medications, let's say paracetamol. So that paracetamol, how does it get developed? There is something called as API or the raw material for creating that paracetamol drugs that is used in the creation of paracetamol. So similarly, you have animal based APIs. These are wet APIs. These are what animal doctors usually use. These are what animal doctors or veterinarians So this is what doctors who cure animals use for treating animals. So just to clarify the point, if you have a dog or if you have a cat and if they are going through some kind of ailment or disease, then the medicine that is used for treating that ailment, that raw material, API, that is manufactured by this particular company, and almost 78% of their revenue comes from this particular segment. So this is the first key point that you must remember about NGL Fine Chemicals. Now, second key point that I want you to notice is the amount of export that they do. So in India, their sales is only 22%. Their majority of the sales happens in Europe and outside India. Now, this is a very, very big thing for multiple reasons, and this is the reason why the stock is also risky. Now, there is good and bad part to export-oriented business. Now, let me just quickly jot those key points down. So, first and foremost, key good point about export-oriented business is that these type of companies are set to benefit a lot because of the devaluation of rupee. Let me know in the comment section if you would want me to make a separate video on what type of companies can benefit by the depreciation of rupee. I will 100% do it. But the first key point is that due to the devaluation of rupee, so by next year, rupee is set to depreciate to almost 80 rupees to a dollar. Right now, it is trading at approximately 75 rupees to a dollar. So that way, export companies like Rajesh Exports and bunch of other export-oriented business are going to benefit. That is first key point. Second key point, there are regulatory changes that you need to be aware of. Now, if the regulatory regime in Europe stays same or stays constant, then these type of pharma exporters are going to be fine. But if there is any major regulation oriented change in Europe, then these type of companies can suffer a lot, especially small cap ones. Now, what is my viewpoint on regulation related to animal based APIs? Okay, it's fairly simple. One is that major changes or major impediments would happen for human based APIs. So this is something that this company is not exporting in large amounts anyways. So it's fine. And second is that this company is focused a lot on quality, which I'll show you through their annual report also. And they have existing long-term contracts. So it means that they have somewhat of a stable business when it comes to exports. So why am I bullish about this company? So let me first and foremost explain it to you why this company's financial and management is so sensible. So if you start looking at the numbers from 2010 onwards, you will see that the sales have constantly grown. In the last 10 years, it has almost become 8 times, which is massive even for a company its size, right? Are they growing profitably? Absolutely, right? For example, in 2010, operating profit was 5 crores. Now, again, this has actually increased at a faster rate. Therefore, you see this on the ROCE, right? The ROCE is 52%, which is again very, very high. Now, if you actually take a look at where they are spending their money, so if you take a look at the fixed asset tab, you will see that they are constantly expanding their capacity, which is again a very good sign that the company has ambition to grow really fast. It is expanding its capacity. I will again talk about that through their annual report. So the company is expanding its capacity. It is growing profitably. It is increasing its sales. It is a net positive cash flow company. And let me show you the final and the most interesting part, why the share prices from here can literally go 10x also if everything falls in line. Okay. And that part is investors. So look at the investors, right? So promoters have not cut down their holding at all. And then we have 0 DII and 0 FII. What does this mean? One thing is that you can say that, you know what, Akshat, this company is really bad. Therefore, no DII, FII investment. Or you can believe in the second narrative that I'm going to explain, which means that FII and DIIs have not discovered this company yet. What will happen when FII, DII start putting their money in such a small cap company? The stock price will become rocket. They don't even need results, right? The results are already there in front of us. So I'm hoping that some FII or DII watches this video and starts investing in this stock. So this is what I'm bullish about. And the moment FII, DII investing starts happening in this stock, I can guarantee you that this stock will go 3x, 4x very, very easily. Now let us try to uncover that why is it that a DII or FII might be interested in this business. So let me show you the annual report of this company. Really, really interesting. And the first thing that stood out about the annual report was how clean this annual report is. It seems like that they have nothing to hide and they have given excellent information on their website and on their annual report. Even top business schools in India do not take so much effort in terms of giving out their placement reports and making the numbers transparent. So that is a good sign, right, for any company. This is not a qualitative sign as to why you should go ahead and invest, but definitely it's a plus. Okay, so let me take you through some key factors that I feel are very, very good about this company. I have read the entire 184-page report. Please give it a like button. I do a lot of reading for all of you guys. So let me take you through some really important sections. Okay, so first thing is that this company is generating excellent quality material and they are playing on quality. Now, this can be looked into that we deliver high quality and reliable products with 0 rejections. And this also plays into the fact that their 35% export happens in Europe, right? It just doesn't make any sense that if your quality is bad and you are getting a lot of European clients, in fact, your business is more outside India than in India. Now, this is an excellent sign and it also makes sense. For example, if you understand that backward integration, so backward integration simply means that if they are creating the raw material, they are controlling the supply chain, almost 95% of the supply chain and the processes. Therefore, they can ensure the quality of the output that is being generated. So that is what effective backward integration means. And looking at the fact that their export is very high, they have long-term clients, they have 0 defect, it indicates that, you know what, these guys know how to control the quality of the product and that is allowing them to maintain a competitive advantage. Now, this gets also reflected into long-term relationships. We have built long-standing relations with over 400 clients across 50 countries. This is not very easy to do. It looks fairly simple that, you know what, these guys can write like anything on the annual report, this, that. No. Actually, having strong brands, especially outside India, to trust Indian entities, it's a very difficult task. If some company is doing it, then we should give them due credit and it shows that, you know, this company is in it for the long haul. And these are exactly the type of parameters that I check before investing in a small cap stock. that, hey, is the management clean? Does the company have any kind of massive competitive advantage? So in my opinion, the massive competitive advantage for this type of company is the quality control that they can ensure. Now they can ensure quality due to multiple reasons. First and foremost, backward integration, great. Second, they have very high ROC, so they can pick up that money, reinvest it. They don't have to cut down in terms of saving cost here and there. So at least the financial story makes sense in terms of why this company is likely to preserve its quality. Now this brings me to the second reason as to why FII and DII might be interested in this business. So one is that the animal healthcare market is actually picking up. Now, if you take a look at pharma segment CAGR, it is around 5.4, but the prognosis is that the production animal segment will have a larger pie. So this is actually a good sign for companies specializing in the animal API market. Now, this is validated by the fact that the compounded annual growth rate is 7.3% in this segment. Now, of course, good industry growth potential. This is happening for almost all the industries. So what makes this industry so special? That is fine. But here is the magic. Now, I feel that this third reason is the major reason why DII and FIIs will start jumping on this stock very, very soon. Okay, so here is the point. This small cap company has massive ambitions. They have acquired Macrotech Polychem, right? And they have recently done this acquisition. They have expanded capacity, 40% commissioning brownfield. They are undertaking capacity expansions. And it's not just blind ambition, right? There are a lot of companies, again, I'll not name them. You guys can name them in the comment section. They just go and acquire customers at whatever cost. Even if they have to give them waffle at 10 rupees and deliver it to my home, they will still do it just to acquire a customer. That is senseless growth. This company, I showed you that they are expanding their assets every single year and they are increasing their ROCE as well. Now, if you connect these few points, what do you learn? You essentially learn that their profitability from every customer is going up. What does that mean? It simply means that they are not spending a lot of money in terms of customer acquisition cost. They are not taking like massive trips to Europe just to win more and more business. It means that their existing customer is very happy with this particular company. Therefore, it keeps on giving them more and more and more business every year. And this company's ROCE keeps on growing. They pick that excess ROCE and invest in capacity expansion. Now, of course, this is a small cap, so we must understand about the risk mitigation also. So I will take you through that slide. Now, here is an excellent slide, and I have not seen this type of a slide being designed by any company so far on their annual reports. It is so wonderfully designed that it really wins my trust from that angle. Now, they have given out an entire outline as to how they want to minimize the risks going forward. So the concern might be that, okay, this company will see a lot of competition in this space. So first and foremost, it's a very small company. It is not attracting a lot of attention as of now. This is a very small market to begin with. So it's not as if that big players are really interested in it as of now. But the company is categorically saying that, hey, we have maintained our quality. We have won like long-term contracts, etc., etc. And that is our strategy that is reflecting into their numbers. Now, second was there was some kind of an environment issue which took place on 6th March 2021. The share prices did not fall for this stock at that juncture. And they have given a very clear explanation. Number 3, they are talking about that export risk hedging strategy. They are doing it already because, for example, if the rupee price appreciates or depreciates too much, then it might be a problem for this company. Therefore, they are doing some kind of hedging. So essentially, one by one, they have debunked all these different types of risk, and I as an investor feel more confident making an investment in this company. Okay, so what is my buying strategy for this particular company? So I'm buying a little bit of stocks as of now. Stock is clearly on an uptrend. And if you actually check the entire region, so I'll buy this stock in 2 tranches. One is that I'll wait for the stock to consolidate. So the stock is consolidating as of now. I will do small buying, right? I'm writing this down so that you can also note it. Small buying only, right? I'm in no hurry to accumulate this stock in one go. I have put my first investment already and I will probably space out my investment in 10 to 12 tranches, right? So I will invest in 10 to 12 small segments. That is what I'm going to do. Now, this strategy might change. It might change as soon as I hear something about DII or FII acquiring this stock. The moment this happens, the stock price will go up. I don't bother at that stage. The stock can move up 20% also. I will go and invest a bulk amount. It's fine. It's not a problem at my end. I'm happy buying this stock at higher valuation also because this stock will exhibit something called as PE expansion. It will 100% happen on this type of a stock whenever FII or DII puts their money in this. So I hope you enjoyed the video. Also share more data and information with me. If you have any information about this stock, I'll factor that into the mix and I will make an updated video on this stock. And just again, very quick disclaimer that this is not a buying recommendation. I'm honestly and transparently sharing whatever I am doing. Feel free to incorporate this strategy. Feel free not to incorporate this strategy, especially for a small cap stock. When it comes to HUL or when it comes to Asian Paints, Of course, I'm okay recommending those type of stocks. That's not a problem. But these type of stocks can be super risky. So please do it at your own due diligence only. Please do not come back to the video and say that Akshat, the stock moved a lot. Of course it will move because you are literally investing in a startup, so to say. So I hope you see this video in that spirit and act accordingly. I hope you enjoyed the video and I will see you the next time.